Well, this time last Monday, we were looking at potentially the worst day in the market since the COVID crash. It was all about the Japanese yen carry trade. You had the VIX spiking. This Monday, a little bit calmer for now because we do have some big inflation data coming this week. Starting tomorrow with PPI, we will preview that. We've got some news in the regional banking world. We've got some Tesla news to talk about. Should be a fun Monday. Joel's out in the swimming pools, but I've got my man Dennis hanging out backstage. Let's go ahead and start pre-market prep. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Alrighty, traders and investors, welcome to pre-market prep. Let's go ahead and run through the indices real quick before we bring Dennis on. You've got the S&P 500 trading up slightly higher. Sorry, the prints are going away right now at 8 a.m. as we get these wonky ones. The Qs are also trading slightly higher this morning. Let's go to a 2-minute chart and we can, hold on. Let's get a refresh going here. Either way. Bottom line is that all the major indices are slightly higher. It's a quiet morning right now as we head into the open for the most part. Let's go ahead and bring Dennis in. Dennis, how are we doing this morning?
Doing pretty good. How was the weekend, AB?
Weekend was good. I kind of just hung around downtown Detroit the most of the weekend. Yeah, no complaints.
I went into your old stomping grounds. I actually used my Red Lobster gift card there that I've been sitting there.
Really? So they're still around?
It's still around. It's still open. Went down to Barrie and used up the Red Lobster gift card. I hadn't been there in a long time, and a lot of things have changed over the years. Because one, they don't give you the free Caesar salad with like every meal. You only have it as a side now. Because these stores bring in the bread and then the salad and then your meal. So you could see where they had been cutting costs through the years. And when you don't go there for 10 years, you can really notice the difference. I noticed the size of the biscuits were smaller. I noticed, the size of the meal was smaller. And I noticed the price of everything was higher. So, I mean, I guess that's, par for the course wherever you go now with, but then, after Red Lobster, AB, we actually renewed our Costco membership, and the first time in Costco in 4 years. And you know what? It was a pretty darn good experience at Costco. I kind of know why everybody goes there, because they got the free samples going. So I got the 2 kids, and we're going around trying to get the free samples, and then taking the kids around again for another round of free samples. And at the end, they got the cheap food. So I'm like, well, hell, it's supper time. Let's eat some supper here. Hot dog pop, $1.50 still, no inflation there. Piece of pizza, $2.29, pretty darn cheap too, and it's a big quarter slice they cut in half. So I was actually pretty impressed with the Costco experience.
Yeah, if you do enough shopping there for the actual stuff, it can get pretty. You can rack up a bill pretty quickly there at Costco is what I've noticed. But if you're specifically going for the things, the hot food, like you said, that cafe, you can't beat those prices there. But if you're out there, grocery shopping, you buy some things for the house, next thing you know, every time I go there, it's I know it's going to be at least $300 or so. But Costco,
they got a family, it makes sense. I mean, you got to buy the stuff obviously in bulk. So, if you're a single guy like you, AB, maybe it doesn't make a hell of a lot of sense. But it was 4 years. I did notice inflation there too, though, not obviously the hot dog combo, but just on stuff overall. You really notice it, when you haven't been in a store in 4 years and you remember what you used to pay. I always ate tuna, so you'd buy those 6 cans of Ocean's tuna, and it was always $8.99 for the 6 cans. You know how much that is now?
How much?
$16.99.
Wow.
Same 6 cans 4 years later. So I'm in 2020. We stopped during COVID. We let it lapse during COVID, and then we never went back. So 4 years later, those cans of tuna have basically doubled in price. Now, not everything obviously has doubled in price, but a lot of things have. So, we're going to get into this inflation data here tomorrow to obviously start driving the bus, because we know last week was the Japanese, was talking about the carry trade with the yen. That was all last week's conversation. That's quieted down, not hearing a lot about that. But this week, it's going to be different. Let's get into these markets. The economic calendar is chock full of inflation data. PPI tomorrow, CPI Wednesday, more jobs data, I believe, on Thursday, if I'm not mistaken. Lots of economic data. That is where the market is going to start to look that is what is going to drive the bus. So all eyes turn to inflation.
Yeah, and I'll just pull up right here the economic calendar. So for tomorrow morning, of course, we'll be live on the show. We'll get the PPI producer price index for July. The expectation is for it to have grown 0.2% in July. That would be in line with the previous numbers, also of 0.2% core PPI. Also supposed to come in at 0.2%. It was 0.0% the previous month. PPI year over year, we're looking for 2.6%. And for core PPI year over year, we're looking for, or sorry, those are the previous numbers, 2.6. So it looks like we don't have the estimates for the year over year numbers tomorrow. But either way, we'll be here live on the show as we get these numbers, be able to break down the market's reaction to those. Last thing on Costco, Dennis, I know they recently increased their membership prices. Did you have to pay the new increased price, or did you get it?
My wife bought it. I didn't even notice, actually. I should have asked her how much if it went up to it's supposed to go $5 or something from 50.
Yeah,
50
like $7. Maybe you wouldn't even notice it anyway.
Yeah. No, the overall experience, and the place is packed. I'm like, oh my gosh, you can't find a parking spot. You're waiting in lines. I mean, it's so busy. But they pump them through pretty good. Good systems. Like, I mean, the amount of money being pumped through there is nothing short of incredible. And that's why it's always carried that premium multiple there. So last week's pullback in Costco is a thing of the past. That stock's getting right back up to the highs here again. I mean, and that's where maybe we go with the show here now is last week's pullback does appear to be a thing of the past for a lot of stocks here. Do we get a dip to get back in here? Do we revisit the lows? Do we go straight up from here? I think inflation data is going to probably dictate that path for the markets this week. But what are your thoughts? What's the chat's thoughts? Are you guys buying dips here? I mean, some stocks are still down significantly. You've got Nvidia up there. $141 back in June. It's only $105 now. Now we're not down at 91 where we were last week, but we basically bounced and then we had 3-4 days of consolidation here. Do we think Nvidia is going right back to the highs? Do we think Nvidia's, I obviously said back in June, I think it's topped out for the year. I've sold a lot of my Nvidia position, but I'd like to reload it. Thoughts, chat? Do you reload at this price or do you get a shot back there at 91?
Yeah, I mean, I think so. When you have something going on like we saw last Monday, where it was just a wide, sell off, a broader market sell off, everything was getting hit. And then when the tide started to shift, which of course Monday morning happened pretty quickly, like right off the open, people started buying stocks back. You can kind of see, where the strength is, and as the overall market was coming back, Nvidia moved up more than 10% from its open price on Monday. Let me pull up like a 5-minute chart here. We can go back to Monday's price action. This was last Monday right here. Let me zoom in right where my cursor is. So right here at 9:30, it went up 2%. Then the next 5-minute candle went up another 3.5, almost 4%, and then just kept moving higher. So by the time right where my cursor is right now, 10 a.m., it had gotten back up above $100 when it was opening at 91. Yeah. And, part of it was, okay, sure, it was getting sold off a little bit more than some of the other names because I think Nvidia was set to open down 8 or 9%. But the fact that you had so many buyers willing to come in when you had all this uncertainty, to me, shows me there's still strength in the stock, and that when we do have a better overall market environment, I think Nvidia should continue to move higher.
I think I don't think we've seen the all-time high. I think we've seen the high for the year in Nvidia, and I said this back in June, so I'm going to stick with it because that call is looking very good here right now. But I don't think we've seen the all-time highs. I don't think it's be like, oh, we're going to talk back and look at 2024, the year of the Nvidia bubble. I think AI is still going to be a big story for coming years. I think Nvidia is in the pole position. So I do think we eventually see Nvidia higher here. So I definitely want to reload the Nvidia shares that I've sold, and I've sold multiple times here. It's just a matter of timing, and timing is a matter of the markets, and that's the trader's job, is to try to time the markets. It's tricky here because you're at the crossroads. The stock has broken the uptrend. The stock has, had an incredible run for 2024, and it is in its cooling period here right now. Typically on the pullbacks, you want to buy good companies at reasonable valuations. Nvidia's come down where the valuation isn't as crazy as it was. It was trading 42, 44 times earnings, was up 140. I think on the forward basis, it's down in the low 30s again, which starts to sound more reasonable. But it's still, when you compare to the overall market, obviously, we've got, stocks trading 10, 12, 14 times earnings. You go down to the Fords and GMs are trading 6 times earnings. It's such a valuation market. It's like you've got a story, they're willing to pay really high valuations for the stocks. You have no story, they don't want you, even if you've got, great valuations. Like the same we've talked with Alibaba for so long. Valuation's fantastic, but it's cheap, but it doesn't matter. There's no story here. And the story actually is scary because you start talking geopolitical risk and then people are scared of that. So, I mean, it's all about a story. It's all about having a reason for investors to come into the stocks. And I don't think the Nvidia story has gone away. I think it's just in a cooling period. So at some point in time, I'm going to reload some Nvidia shares.
Yeah, and I mean, Nvidia does have earnings coming up, I believe. Let's see.
You may want, yeah, it's coming up towards the end of the month. And sometimes we get that, buying 7 to 10 days ahead. You sometimes get a pretty good run. I think I want to sit. It's scary to be fully going in here right now with the potential that, inflation data could derail a rally. So, I mean, I guess it depends on what you think. If you think the inflation data doesn't matter, maybe it doesn't to Nvidia nearly as much as the IWM. But I mean, we've got a couple major inflation points coming with PPI and CPI. So it's hard to make calls ahead of that data.
Yeah, so the Nvidia report is coming on August 28th. So that is 2 weeks from Wednesday here. So still a couple weeks on Nvidia. It's always interesting how they report so much later than the rest of the big tech crowd. Let's get into some specific stock news this morning. Sure. We'll start with KeyBank. KeyCorp is getting a stake from, who was it? Bank of Nova Scotia. Bank of Nova Scotia is acquiring a 15% or 14.9% stake in the company for $2.8 billion. So, you get $2.8 billion coming in for a 15% stake. The stock is trading up 25% now. That is 24.6%. When we started the pre-market show, it was like 19%. So this thing is continuing to move higher. We'll go to a 2-minute chart here. KeyCorp again. Getting this capital from Bank of Nova Scotia, 15% stake. I think it's probably up, more valuation than the $2.6 billion. Now, I wonder if that's investors just speculating that, like, oh, they must like it for a reason. So things are, think it's going well for KeyCorp, going to get in now, buy the stock. I don't know. Either way, big move off this news.
So how much did they put in here?
2.8 billion, and it's a 13.7 billion
divided by 0.015. Just trying to see what they're valuing it at. So if you go, so say it again,
2.8 billion.
They're putting 2.8. 2.8?
Yep.
And then I'm dividing by 0.15. That's going to give me an $18 billion valuation. That's what Bank of Nova Scotia is valuing KeyBank at. We're just simply calculating, if they bought the whole thing, that's what they're valuing it at. So is at 18.66 billion. There's roughly a billion shares outstanding. So it's pretty quick math. It's like $18. And look, the market takes it right to what Bank of Nova Scotia is valuing it at. I believe this is a selling opportunity, not just because I'm a sell the rip person, which I definitely am, but because they're taking it right to the premium that, Bank of Nova Scotia is giving them, as in they're taking over the whole company. But they're not taking over the whole company. They're only taking a chunk. So it's just because Bank of Nova Scotia thinks it's worth $18 and willing to pay 15%, doesn't mean the rest of the investing world should be paying that. So I think if you're in KeyBank, I think it's a gift. I think it's an opportunity to sell. I think we have a lot of data coming that's going to, drive the bus, but we know banks have come off recently. KRE has come down recently. So KeyBank, getting right back and taking out the highs of the recent move because they're getting a stake. This is a big, huge move. The last time KeyBank's moved 22% is probably when we were having the regional banking crisis back in March of 2023. This is just an enormous move for this stock. And yes, you're getting a stake from, Bank of Nova Scotia. I'm a Bank of Nova Scotia shareholder in Canada. I don't even like them paying that much for this company. I don't think it's going to be rewarded for it. BNS, if we're looking, as trading basically flat. But wow, that's a big pop, man. I wouldn't be chasing it here.
Yeah, and right now I've got the chart of the regional banking ETF, the KRE, and then in the orange is KeyCorp's chart. So you can see how similar these two charts look. Like they've basically just been tracking each other perfectly. And we know, we've had, obviously, you go back to the regional banking crisis last spring. You can see that big drop here. And since then, been kind of slowly coming back, but not without dips along the way. And again, like you mentioned, you did have this recent downturn in the regional bank. Regional banks, I mean, the KRE, that could be something interesting to watch as we get ready to cut interest rates because, that's been part of the problem with a lot of these banks that they just haven't really done as well or been able to, their balance sheets have run into some issues with the higher interest rates. So potentially, as the interest rates come down, maybe some of the regional banks get, a little bit more rebound here as well. So we'll see if any other regional banks moving off this KeyBank
Well,
news.
KRE is up overall. Just questions people are, asking, that's the calculation there, why do that? Because you're trying to figure out what Bank of Nova Scotia just paid for it. So if they did a $2.6 billion stake, it's 14.9% is the actual equity. I just rounded to 15% because it's around 15%. But technically, I should have divided by 0.149, not divided by 0.15. But I was just trying to get, the approximate valuation that the company was obviously willing to pay for this. And they were willing to pay $18.6 billion at that valuation for the company, with roughly, again, rounding, a billion shares outstanding. It tells you're around 1850 or whatever they were paying for the stock. It was a few less shares, so I rounded it down to 18. Basically, the market is taking it right up to the price that Bank of Nova Scotia paid. So basically, if you're buying it this morning, you're paying the same exact premium that Bank of Nova Scotia paid for their shares. You're saying that Bank of Nova Scotia believes it's undervalued, so the market believes it's undervalued too, which means it should go a lot higher. I don't know if I buy that. I think they're just taking a stake. I think, Bank of Nova Scotia obviously trying to get more of a presence, maybe in regional areas that they're not. So it maybe makes a lot of sense. Bank of Nova Scotia, one of the biggest banks in Canada. They do have, a presence in some U.S. states. They have a very, very big presence in the Caribbean. But maybe, this makes sense for them to try to get a presence, obviously, in the U.S. as well in different states. So it may make sense for them, but does it make sense for every investor to come up and pay 22% more for KeyBank than they did yesterday? I don't think so. That's just CFA hat on.
All right. Well, that's KeyBank. We'll keep an eye on KeyBank, see if it gives up some of those gains before the open. Similar, kind of in a similar realm, we'll go to Starbucks here, which is trading higher after a second activist investor is now entering the stock. Of course, Elliott has been in Starbucks. Now we're getting Starboard coming in, I believe, buying, let's see. I don't have the exact numbers in front of me, Dennis. Let's see. Activist Starboard Value takes stake in Starbucks. Another activist hedge fund, Elliott Investment Management. Let's see.
It was Friday night, so you got to go back to Friday night.
Let's see. I'll pull it up real quick.
It was probably I can't remember the size of the stake. And again, this wasn't confirmed. I don't believe it. I believe it was Wall Street Journal reporting it. Sorry if that's wrong too. I'm going right from my Friday memory. But this was your big mover Friday night. This came out shortly after the bell. And Starbucks was ripping higher, and I was like, we already know this activist stake. I was like, oh, wait a second, Starboard. Elliott was in there, so they're both in there. And I hadn't actually thought, that they had teamed up like this before, but a couple people in my Twitter account let me know that there has been times, where both of these activists have teamed up before. Trying to go and find the actual tweet where somebody said, because they gave me some examples. I didn't verify it. Alex Anderson, a great follower on Twitter here. He said, according to Reuters, they've teamed up before on eBay, Salesforce, Match, and prior to Starbucks. So this is the fourth time they've teamed up, at least according to Reuters.
That's
Alex is
interesting.
often in her chat as well. Great guy.
Yeah, you don't hear about the activist investors usually like teaming up like that or both being in the same stock at the same time.
Interesting.
But it is interesting. And you can see here on the 2-minute chart here for Starbucks, you can see when that report hit Friday afternoon, got all the way up to as high as around $78.50. Traded off $1 from those highs. Now we're down to 77 and 15 cents here as we set to open. But Starbucks trading up about 3%. You go to the daily chart here, you can see Starbucks has just been weak the past, really the past year or so. Like June, this time last year, you go out to August last year, the stock was above $100. Now it's at 75. Someone in the chat called it a sick puppy. I don't know. I mean, when you've got two activist investors, that should make it
help.
Yeah, it should make it easier to switch some things up. Maybe they'll find some areas to cut costs, maybe save some money, maybe increase some operational, save some money somewhere along the way, and potentially, I mean, I think for activist investors, when you have a brand like Starbucks that's so recognizable, so ingrained in like American culture, and it's been struggling and it's been off the highs. I'm sure a lot of the activist investors just look at it and say like, hey, we can come in here and fix this. And it probably will end up being, not the easiest path, but I still think, I mean, it's kind of an interesting technical level down here for Starbucks, Dennis, like hitting this. Looks like you have some support down here around $70 multiple times. So who knows?
I think it puts a floor. We know when Elliott's entered stocks in the past, and this isn't Elliott, this is Starboard, but it kind of puts a floor in the stocks. Now you have Starboard in there as well. It kind of makes me feel like you're going to have like this $72 to $75 floor. Anything can cut through the floor and things can go lower. But it's a confident feeling for investors to know that there's two activists in here trying to shake things up and clean up this company and turn the stock around. That's a comforting feeling for investors. And I know management usually fights these activists, because they don't want to lose their jobs. Well, shareholders aren't about the management keeping their job. Shareholders are about making money. So that's why the activists get in here. And, they usually are good for the stocks. I'm not coming and buying Starbucks because I just can't, understand why people are paying, as much as they do at Starbucks for coffee. But I've never understood. I've never been an investor in Starbucks. It's one stock that I've never owned, so I've missed it for a lot of years. But, this stock's been in a downtrend for 3 or 4 years here now. And if you look back, it hasn't gone anywhere for 5 years. So it was due for some activist action here, and that's what it's getting.
Yeah, I mean, where we're at right now in the chart, looking at the daily, you can go back to kind of the middle of the COVID crash, or I guess at the very start of the COVID crash, February 2020. It got all the way down to, $48 in March. But you're like, you're right there with where it recovered to when the markets turned around during COVID. So yeah, like you said, Dennis, I mean, it's been 4 years now, 5 years. You go back to May 2019, stock has not gone anywhere. And I think that's, part of the problem with these types of companies. You look at Starbucks, you look at like a Chipotle, really the only growth you can get is through opening new stores. And then you hit a point where you can't really open any more new stores. Yeah. Cause I mean, like I've said it before on the show, but there's a spot here in Detroit area in one of the suburbs that legitimately has 2 Chipotles within like a mile of each other on the same road. And I'm just like, there's no way, I guess like maybe a McDonald's or something you could justify if it's by like a busy highway and both the drive-thrus are always, busy. But for 2 Chipotles, like it just makes no sense. And so I think, Starbucks ran into that issue like earlier in the 2000s when they opened just way too many stores and had to go around and start closing a lot of stores. And every time you open a new store, you're taking on, debt. It costs money to do it. So it takes a while to even earn that money back. So to me, like the growth in Starbucks, I think you've already seen probably a majority of it. I don't know how many more stores they can really open before it's just oversaturated. And like you said, like more people might be just thinking, I'm going to make my coffee at home. $4 is ridiculous for.
Or they go to McDonald's, and I think coffee at McDonald's is like $1 or $2. So
yeah, I can't taste the difference. I mean, I don't know. I mean,
my parents prefer it. So my parents go to McDonald's all the time. They prefer it. So, and my wife actually prefers it too. She says McDonald's coffee is great. The other issue, and I said this before, like, obviously McDonald's has done these McCafes for a while, but there's enough focus to all these McDonald's changing to McCafes. That's an attack directly on Starbucks. That's trying to take over their market share. McDonald's obviously trying to move away from, we're this play, for little kids to like, we're actually a coffee shop where we get burgers, and we, so they're trying to appeal to both markets. And McDonald's has done that kind of right because these McCafes are really nice. I mean, even in Canada, we slowly keep seeing these McDonald's convert from basically play centers for kids where they're running around and kids are screaming and yelling to like they take the play centers out of them now. A lot of them are losing the play centers. I know, like for the most part, most of the play centers and a lot of the McDonald's are gone, and they're turning them into like more like come in, get your coffee, read your morning paper, little fireplace. I mean, that's a direct attack on Starbucks. So I mean, that's probably a lot of the issue too. Is as these McCafes keep update, McDonald's keeps updating the McCafes, it makes it feel like in a Starbucks experience, and it's half the price. So that's the issue Starbucks is facing. Competition coming from everywhere.
Yeah, I will say the McDonald's, I did hit that meal deal they're offering. I don't know I think it's like a limited time thing, but for the $5, you mentioned it last week too, Dennis. I mean, that's a pretty good deal.
It's a good deal. That's what they needed to do. Like we talked about on the pre-market prep show, we were giving them hell Remember, for like 2 months, I kept giving hell on McDonald's. I'm like, it's too expensive. They need to figure something out. And obviously, they're listening to their customers because that $5 meal deal, it's $5.69 in Canada because Canadian dollar is actually probably cheaper, if you did the currency conversion. But I had it last week, and I'm like, that's a pretty darn good deal. It's not a $1.50 hot dog Costco deal, but it's still a pretty darn good deal. So I think McDonald's is starting to actually figure it out. I'm not saying I'm going to put all my money in McDonald's again. There's not a lot of growth there. And what's the story? But at least the stock, if we take it over to McDonald's, is stop going down. And I think it's because customers and shareholders starting to realize that McDonald's is starting to figure it out. They read their customers, they listen to their customers, and they respond to their customers. And now it's great, for them to respond, obviously. And now with the $5 value menu, their value meal, that's a pretty darn good deal. That's reasonable. That wants to bring people back into McDonald's.
Yeah, and to your point, I will say, like, any newer McDonald's that has opened in the last few years that I've been to, like, they're pretty nice inside now. Like, you're not getting the old, like, and the one I went to over the weekend or on Friday or something was still kind of one of the older ones. It did still have that playpen, but I've been on the road and stuff in the past couple of years where I've stopped at like a McDonald's that was built recently, and you go inside and you're like, wow, this is like a nice place. It feels like you're going into like a more of a higher end fast food restaurant, like a Chick-fil-A or something like that, that
Yeah,
are typically pretty clean and nice on the inside. So I think McDonald's is doing some good things. We'll see how
they
long
are.
that meal deal continues to last. And again, if you have the app, you could make it even more affordable if you need to. All right, let's talk some Tesla news, because we did have some news with Tesla as
Sure.
well, Dennis. When we started the pre-market show, Tesla was a little bit in the red, now a little bit in the green, but there was reports over the weekend that Tesla is halting orders for its cheaper Cybertruck version, and it pivots to a pricier Cybertruck. So I actually have been I've now seen like probably a handful of Cybertrucks out on the road. Saw one in downtown Detroit over the weekend. But Tesla here, obviously it got caught up in the sell-off last week, but recovered a little bit. Now we're trading right around $200. How are you feeling, Dennis, about your Tesla position?
Again, the short-termism, I'm not about this. I don't know where the stock is going short-term. I mean, we can do a technical on it short-term. It's starting to stabilize. I mean, you've got, key support here, because we don't have Joel here today. He would normally do this. 190, I mean, you're down there. The main thing for Tesla here probably isn't the Cybertruck news, but the main, news we got over the weekend at 8 p.m. last night is that Elon Musk is going to do a one-on-one with Donald Trump tonight at 8 p.m. I think the stock could maybe show some life into that, because they're excited. They like this. Tesla shareholders like this, relationship, because we know, like, if Tesla's ever going to get FSD approved, it's going to need, the regulatory approval to do it. If Donald Trump, and it's a big if, because Kamala's obviously come up in the polls are neck and neck, but it doesn't hurt that he's becoming very good friends with a potential future president. I mean, obviously, if Trump wins, that would be huge for Tesla in that way. But I mean, naturally, you would think it's going to be more difficult for, an EV company to get all the regulatory approvals through a Republican, and obviously, with all the credits and everything else, probably easier through the Dems because it's clean energy. So, I mean, he's obviously still, and again, I'm not I'm not going to take this into politics here, but saying, I think he's obviously warming up to Trump because he knows he's going to need a lot of regulatory approval. So this doesn't hurt that case. Long term, it's all going to be about two things: FSD, and longer term is humanoids. Where that goes. So that's why I think Tesla's eventually going to figure it out. I think Musk's going to eventually figure it out, and that's why I'm putting Tesla into my retirement account, not in my trading account. 0 shares in my trading account. It's my retirement account. It's been in my trading account. It's been in and out. We were trading it quite a bit. And I do trade Tesla regularly in my trading account, but I have no position in the trading account right now. I think it's just, been hit by the tech hit. And I think, it could end up going lower here too. It all depends on timelines with FSD.
Yeah, and I mean, after we got that news that Musk was like donating to a super PAC, supporting Trump and all that stuff, and we talked about it on the show, I was like, I think there could be a chance that we look back in 5 years and we're like, that was a silly move by Elon. Like, why is he doing that? And now, like, to your point, that it looks at the time Biden was still in the race, and it looks like now that Kamala is going to have a better shot against Trump. Like, if Kamala wins, it's not like Trump can just, or Musk can just go back and be like, oh, just kidding, and then start pleading with the Democrats for the regulatory. But to your point, Dennis, I guess like the Democrats are going to be more likely to support this stuff anyway.
I think they would naturally support it. So it's like he's kind of hedging his bets to a certain extent. I mean, it's probably not good that he's full on like, like basically dissing Harris and, and again, the biggest risk to probably owning Tesla stock, probably the biggest risk is what Elon Musk is going to say. Because he could say something that just offends everyone and, the cancel culture is, and then nobody's going to buy a Tesla. I mean, that's probably the biggest risk for Tesla is not so much what Elon Musk does, it's what he says. Because, what he does is he figures things out. I mean, everybody laughed at him again, and I don't want to take it to the Tesla show because it pisses a lot of people off. So I just, I'll just say I'm holding my Tesla. I don't think it hurts tonight that he's interviewing Trump, but it all depends on what gets said as well.
Yeah, it should be interesting. That for sure will be, big fodder for the media outlets, and there'll be a lot of headlines after the Musk.
Trump what I find interesting, maybe we should take it into this, is that Trump is willing to come on X to do, he owns a competing social media company, DJT. So don't you find that very interesting that he's actually willing to come on X to do that? I don't think that's good for DJT, and DJT is trading down 2% here this morning. I'm surprised it's not trading down a lot more. Like, I think when you wake up and you think about, the repercussions of this, it's not like he's just throwing his own social media company out the window, but you're going on a competing platform and going to do, an interview here, with your direct competitor. I mean, I find that interesting in itself. And I think it's still like Trump just wants exposure, and he knows obviously get a lot of exposure on Twitter, so it maybe makes sense for him, but I don't think this is good for DJT.
Yeah, I mean, if you're running for president, you have like a few different opportunities to really reach like really, really wide audiences. Obviously, like Trump has gone on Joe Rogan in the past and stuff like that. And it's probably just too big of an opportunity to do an interview with Elon Musk that will reach, hundreds of millions of people potentially, or 100 million, however many it'll be, to pass up just because it's on the wrong platform. Are you gonna watch it live?
Yeah, I'll watch it for sure.
Okay.
Yeah, I'll watch it. Elon Musk is always awesome to watch. With Donald Trump, I'm going to watch it for sure. Completely agree, AB. I think if you're like going to be, you're trying to get out there, you're trying to you get to the masses to promote yourself, you would definitely not turn this down. It's going to be one of the most watched things of the week, if not the most watched thing even of the month. So, I mean, you're not going to turn it down, but I'm just saying DJT, I think if you're trading this stock, you got to be concerned. You got to be somewhat concerned about this.
Yeah, you also did have, I mentioned Joe Rogan. You did have Trump and Trump kind of going after Joe Rogan over the weekend. I saw that as well. I don't even know what really. I think Joe Rogan might have said something like favorable about RFK Jr. on one of his podcasts. Then Trump started going after him, and a lot of people were like, "What are you doing?" Like, Joe Rogan's one of the biggest voices out there for, and then so people are upset about that. But either way, that will be big headlines tonight between Elon and Musk. I'm sure there'll be some hot takes there. And Elon, so wait, is Elon going to be the one, I guess, hosting the actual interview and it's streaming live?
Yeah, just Elon and Trump. That is so interesting in itself because here you have two people that don't sugarcoat anything, don't follow script, and may say anything. So it's going to be really interesting here, for them to just come on and just basically say anything. Musk is going to ask anything, and Trump says anything too, so it's going to be really interesting.
All right, let's move on from that. But again, I'm sure we'll be talking at some point tomorrow about what was said during the Musk.
Yeah. Keep an eye on Tesla stock, though. I think DJT, it's a little short-term weakness for this. And I wouldn't be surprised if Tesla's down here this morning, I believe, still in the Cybertruck. I wouldn't be surprised to get a little pop towards the end of the day and maybe into the after hours on the excitement of this interview.
All right, it is about 8:35. We've got our esteemed guest of the day hanging out backstage. We're going to be bringing Joe Saluzzi back on Pre-Market Prep. So without further ado, let's go ahead and give Joe our special intro and bring him on. All right, Mr. Joe Saluzzi, how are you doing this morning?
I'm doing very well, gentlemen. How are you?
I'm good. So you survived the crazy market of last week. What are your thoughts?
Yeah, it was fun, right? It was the typical overreaction, which I would say that we normally have here in the equity markets. I thought the story of Friday, which was interesting, coming out on Bloomberg, was how that VIX spiked to 65,
Yeah.
last Monday, and how that might not have been an accurate reading. The VIX, and you guys know more about options than I do, but the VIX index itself is just that, an index, and it's not a tradable. VIX futures you trade, but the index was, according to the Bloomberg article, which I thought was very well written. You take a snapshot of S&P options and you get the midpoint of the bid and the offer, and then that's how they come up with this VIX index. But when you're doing that at 6 a.m. on a Monday morning, the spreads are wide, the market makers are gone, and you're going to get these wacky readings. And I think that's exactly what happened, which ended up scaring more people. So it's kind of a tail wagging the dog, which was, pretty scary. Anyway, Larry Summers, apparently the ex-Treasury Secretary, got involved, and he's calling on the SEC now to investigate how the VIX is calculated. So this could get interesting.
What were your customers saying during, last Monday? Let's take us back a week from today. Were people calling like nervous? Were people nervous about this carry trade, like how big it can get, how ugly this can get? Or was it more like calm, natured here? What were the institutional customers saying?
Yeah, we did not hear any panic. We did not hear any, calls like that at all. I've yet to meet a yen carry trader, by the way. I don't know if you guys have met one, but
that's what I was wondering. Is everybody, all these institutions, just loading up on free yen and just investing in Nvidia? Is that what's happened here?
Who are these yen carry traders? Where do they live? Where are the mansions? I want to see who these people are. But no, not at all. We did, our clients, they range from hedge funds to big mutual funds to pension funds, and so all the entire gamut. And we did not hear any panic calls. We certainly were trading. It wasn't anything like a panic type style trading, or let's just say 2008, 2009, which was a whole different world. I mean, this is nothing like the great financial crisis, right? But, people are concerned, and obviously there was more things going on than just that carry trade, and whether it's geopolitical and what's the Fed going to do. And this is an ongoing story. There's no end point here. It continues. This week, we'll hear more economic numbers. We'll get CPI, PPI. They'll talk about next week at Jackson Hole. It goes on, right? The story goes on. And until we see something, rapidly deteriorating, no, I think in fact, this is a normal correction. And the guys at Barini and Associates, they put some really good numbers out. And the average correction since 1980 is 13.6% in the last 90 days. So we're kind of right in the middle of it.
So do you think the worst is behind us here, Joe? Like, what are your thoughts? We won't hold you to it, but, we are a stock calling show. We try to call the overall market here. Do you feel like last Monday the worst is behind us here? Or do you think, this all, comes to roost here again, and maybe this carry trade was only the tip of the iceberg?
I didn't see anything big news. Was there if the banks were involved, if there's a big major credit crisis going on, that's a whole different story, right? That's something we got to really, we all lived through 08 and 09, and it's still fresh in my memory. So anything like that, I'd get very nervous. So you're looking at credit spreads, junk bonds, things like that. But no, I don't see any of that. So I think it's an average correction. I think, maybe have a little dip again, go check down those levels and maybe go a little bit low. But I don't think you got anything more than an average correction going on right now. So, and then we'll see what the economic numbers show, what earnings show, and all that. And we're just back in the same trend. So nothing out of the ordinary.
Crypto world really got hit on this too. Obviously, Bitcoin got hit, Ethereum. I mean, we've bounced back here, and obviously crypto's down a little bit this morning. What are your thoughts? Just, obviously now we have ETFs, Ethereum ETFs. What are your thoughts here? Just talk the crypto landscape a little bit, Joe.
Crypto, I continue to believe, is an unregulated, wild wasteland that needs to have some control over it, right? Now, what the SEC sanctioned these products, it makes it even worse. The biggest mistake Gary Gensler and the SEC ever did in their tenure, according to what I think, is when they approved the Bitcoin futures ETF. That set the precedent for what's going on right now. And you think they're going to stop at Ethereum? No. They're going to go on to the next altcoin and whatnot. Before you know it, you'll be getting, Shiba Inu ETFs. I mean, good Lord. But it's funny. There's a book coming out later in the month, and I'm not a promotioner, but I did. It's called Crypto Confidential, and I got to review this book, and it's written by a guy, Jake Donahoe, I think it's the last name. But he was an insider in the crypto world, and he talks about what they call these rug pulls and all these, the craziness that went on and how these coins were promoted. And the way I looked at it, the book is kind of like a mix of The Big Short and Boiler Room put together. It's incredible how the whole industry operates, and total lack of regard for regulation. Nobody, where's the adults in the room? Everybody's looking to make their money and get the hell out. So no, I think crypto is still a joke. I would be extremely careful with it.
Thoughts on Gary Gensler? Trump has come out and said if he wins the presidency the first day, he's going to fire Gary Gensler. The first thing he's going to do. What are your thoughts just on how Gary Gensler? Obviously, you said you're disappointed with some of the stuff that's happened in crypto. What are your thoughts overall on how he's been for the equity markets here? And just give me your thoughts on Gary Gensler.
Yeah, I think Gary started out really well, and I think there was a lot of good things going on. But I think what happened here is that too much. They put a lot of stuff out there, and there's a lot of proposals, whether it's climate, obviously the market structure proposals that we've been waiting for that were launched in December of 2002. We still haven't gotten full approval. Only one of the four, actually there's a fifth out there as well. We're still waiting. We're hearing by the end of the summer these might get approved. So the bottom line, he's done a lot of proposals, but getting to the finish line seems to be a problem. And part of it is not his fault. Part of it is that we are in such a litigious society, and particular big firms, big market makers, and big exchanges, the first thing they like to do is sue. They go down, their favorite court is the Fifth Circuit Court down in Texas, and as soon as a proposal will get approved, they're going to sue, they're going to put some more sand in the wheel, and before you know it, a new administration comes in, a new chairman maybe comes in, and all that work is then wasted. So it's kind of frustrating. I appreciate what Gary's trying. I think the SEC went the right route. I just think they put too much on their plate.
Is there any update on this tick size, change? Because obviously we've been talking about this for over a year here now. We knew that they were going to, maybe go to half pennies, like half cent on some stocks, maybe even smaller on some other stocks, and then, expanding maybe out to even, wider increments for other stocks. Is there any update here, Joe?
That's the one we're waiting on, and we're hearing by the end of the summer, so that's getting soon, that at least the final, the proposals out there, the comment letters are all in. They've been sitting since December of 2022 is when the proposal came out.
Long time.
Yeah. So, everybody that we've spoken to thinks that, the access fee one, and those are easier to get done. The tick size one, that makes sense. The one that's a big problem that probably won't get passed through at this point is the retail order auction one. And that's where the industry really lined up against the SEC. And you can bet there'd be threatening lawsuits if that ever got approved. So the tick size one, we think will go. I still am in favor of a test that needs to be more than just say, hey, what is tick constrained, right? If it's just a penny spread, it doesn't mean a stock is tick constrained. There's multiple variables that you can use. The CBOE actually came up with some good analysis that would say that less than 100 stocks are truly tick constrained, but we'll see. The access fee one to us as institutional traders really means a lot. That's where there's a 30 mil fee to go take an exchange, 30 mils per share. The talk is that they might drop that to 15 or maybe 10. So we'll see. So
that's always been the argument, with, obviously payment for order flow is to avoid these access fees. It's why, retail brokers route not to the exchanges a lot of times, but they route to off exchange market makers to avoid these access fees. So if these access fees are lower, do you think more orders come onto the exchange, or are those relationships just too hard to break anyways? Because that would be the goal, right? Isn't that the goal?
Yeah,
and on the exchange.
100%. And I think that's what the SEC was trying to do. And they did it in this really complicated fashion. They were trying to ban payment for order flow, right? They're trying to get rid of it. But we say payment for order flow is not the only problem. It's rebates that are a big problem. And rebates exist on stock exchanges. So my solution's always been, look, this is a really simple idea. 10 mils per side, make or take. You add liquidity, you get charged 10 mils. You take liquidity, you get charged 10 mils, which is a tenth of a penny, whether you're on exchange or off exchange. And guess what, Dennis? Now we don't have the routing conflicts anymore. Now it doesn't matter where I go or what I do. It's the same price. And they'll say, well, that's not competitive, Joe. That's not, how is new innovations going to start? Give me a break. This is a utility. It should be treated like a utility. It's no different than an electricity company or a gas company. It should be regulated that way, flatten the fees. If they want an increase, apply for it.
It's just so hard, with what's happened with the markets. And I'm thinking back to when I started in 1999 and 2000. You put your bid out there, somebody wants to sell to you, and, you have buyer meeting seller. Now there's always a middleman. It's like buyer cannot meet seller anymore without a middleman. Shouldn't they just try to simplify it, and they keep adding more and more tiers and more exchanges and more complications? And it just makes it a mess to get the buyer and the seller to actually meet together.
It is so true, Dennis, which is why we wrote the book 2012 called Broken Markets, right? It hasn't changed. It is all that it does is it gets more complicated because the more complex you make it, the more intermediaries get involved and the more they can basically take shave a little something for themselves. The market is controlled by machines. Let's be honest here. People don't rule the market anymore. It's all machine based and it's all driven by, can I shave a microsecond so I can collect a tenth of a penny? What does that have to do with fundamentals? What does it have to do with mom and pop investing and balance sheets and income statements? It has nothing to do with that, but that's the way the stock market's been built. The crypto market, I don't even want to get started on that, but the bond market is now becoming that way. This is what exists. So unfortunately, this is what we have in front of us. And now my job as an institutional equity trader is to make sure my clients don't get involved in those traps and to make sure that we're trying to stay away from those intermediaries who are trying to shave those pennies off of me. So it's extremely complicated and it's a process that should be simple, but like you just said, they made it overly complex.
So, Joe, after last week's sell-off, I know, we've recovered a lot of it, but are there any specific industries that you're looking at and potentially trying to take a stab at here? You want to kind of wait and see if the dust settles before you're making any moves here?
Yeah, well, we don't trade anything on our own behalf because we're agency only traders, so it's all client business. But personally, what I look at, I thought the small caps were having a nice little run there until this hit came, and small caps have been dying forever, right? They just kind of go sideways, and it really was an interest rate story with them. So if rates were to go down, that should help small caps. They were making a move. It looked like they were catching some momentum, and then bam, they got slammed again. We'll see if that picks up again. If you kind of start to see the dust settles here and we get back into that regular mode of, okay, when's the Fed get a cut and so on. We'll see. I mean, that could be an interesting story, but other than that, we don't play sectors at all here.
Got it. And then let's see, Joe, outside of, are there any specific, small cap names, or you're saying you don't really do trading like that? You're more just going for the thematic. All right.
I think what you were asking though is because Joe's obviously got institutional customers. He can't talk about any individuals, but I always like to get the feel of the institutional customer from Joe there. And, obviously he was saying last week, there's not panic out here. It's not like, everybody was like, oh, it's like back to 2008. Can you do any, just looking at comparisons to where we are now to where we were, because you've been around a long time here, Joe. Institutional customers, how do you feel? Are they coming in here and saying, we got to buy these dips? Do they have the FOMO more? Is the FOMO coming back? Because it kind of feels like it.
Look at that chart you have on the screen. That's not much of a dip when you look at it as a long term, right? But I think what we saw was some nibbling down below at some levels where people would say, okay, at this level, I'm an interested buyer. I'd buy some here. Don't chase it, but if it gets here, I'd buy it and then work it in as a typical order that we'll get is, I would here or, work it, bring it in a little. Don't just stand there on the bid and sit there if you can buy it. But I'm not going to chase those prices. So if they see a stock, and our clients are very good on when it comes to fundamentals, and they're long-term investors, a lot of them, and they think it's a value, they're going to buy it there, but they're certainly not going to chase it. And we did see some of that. We saw some, nibbling down below, but nothing where a FOMO mentality came out. And I think people were thinking about, okay, this may go down lower. And if it does, it's even a greater bargain in that sense, so nothing in that panic sense, nothing in that just on the opposite FOMO sense. So that makes me think that this is a regular correction. We're going to continue to, that chart that, again, will go up to the right. It will probably continue going up to the right.
All right. Well, Joe, it's always great to have you on PreMarket Prep and catch up with you. Hope you enjoy the rest of your Monday. Thank you again for hopping on with us this morning.
You got it. Thanks, guys. Good to see you.
You as well, Joe. All right, guys, that was Joe Saluzzi. Always great to hear Joe's insights.
He knows so much in the market plumbing, and I know obviously sometimes, it's early in the morning, we get into the plumbing, people, don't follow, but it's so much just to understand that you've got a buyer and you've got a seller, and 20 years ago, they just crossed the trades and it's all happy, and it's just not that way anymore. People argue, well, the specialist always got in the middle of it all, but they didn't really. They had what was called negative obligations back then, where if the buyer can naturally meet the seller, they don't intervene. Where now you have just natural middlemen, and we know all those, that just want to get in the middle of any trade. So you go to buy on Robinhood while the market maker will sell to you, and then, somebody wants to sell, the market maker wants to buy to you, and they want to make the spread. That's the whole thing. They want to make the spread. They want to pop in there, and that's why they're in business. But, this unnecessary intermediation is what Gary Gensler was trying to fix. It's what Joe has been trying to fix for years, and fantastic book, that he wrote, Broken Markets, back, in 2009, I believe it was. And I've known Joe for a lot of years. So sometimes, just complications. The markets become so complicated. It's like, simplicity. That's what we've always argued, even myself as a trader. Simplistic strategies, seem to be better. And I still think if we had more simplistic markets, they would be better. I mean, you look at the S&P futures, operates pretty simplistically and pretty seamlessly. So I don't know why we have to keep adding more tiers and tiers. So Joe's always fought the good fight for us, so we love having Joe on the show.
Yeah, great guest. Most of all of our guests are pretty great, but we do like Joe a lot. All right, let's. We got about 10 minutes left, Dennis. I'm trying to see if we missed any
retail earnings season is starting here, and there's going to be a number of stocks that are reporting this week. Not much today. We had Mondays.com, which we could talk about in a second. Not much tonight, but we do get into some big guns starting tomorrow. Home Depot is going to report tomorrow. On, which is a loved retail stock, is going to report. Cisco on Wednesday. We've got Thursday. We've got Walmart, Applied Materials, Ross Stores, Macy's. I mean, some big names coming from the retail sector this week. We've been, there's been some cautious tales. Wayfair CEO talking that this is one of the worst markets he's seen since the financial crisis here. So, I mean, it's going to be interesting to hear from some of these big box stores like the Home Depots and the Walmarts to see if the retailer, if the retail customer is, being a little bit more conservative with their purchase, if they're slowing down. Because, we've seen mixed messages so far. So I think it's going to be a very interesting retail earnings season starting with Home Depot tomorrow.
Yeah, so we got Monday.com up on the screen right now, trading up about 10% pre-market after the company reported. You had EPS come in at 94 cents. That beat the 56-cent estimate. Sales came in at 236 million, beat the 229 million. The revenue was a little bit stronger than expected, so they raised their outlook, hike guidance, beat on both EPS and revenue. Usually you're going to do your stock pretty well. Again, trading up 10% here this morning. We go out to the daily chart. You can see we're kind of like right where we were basically at the end of May here, right around $250 here for Monday.com. So this recovery for Monday has been, kind of slow and steady since it hit lows of $73 back in November 2022. It's just been kind of inching up higher here, some dips along the way, but potentially some resistance up here around 250. It looks like we've kind of topped out there a couple different times in the past few months.
Yeah, you're doing a great job, and Joe and Joel's absence here. 250 is what he'd probably talk about. Multiple highs in that same area. So I'm going to look at it there too and say you're opening into major resistance. Sometimes we take it out. Sometimes, when you throw something against the wall really hard, it can break out. Obviously, we're throwing it up against that resistance pretty hard. Does the 250 hold? That's going to be the first question. If it does, break out through 250, then it starts to open up and gets more interesting here. But first step from Monday.com is going to be 250. Does this stock always report on a Monday as well?
I don't know.
Is that done intentionally?
I don't know. That's a good point. I didn't even think about that. I did see someone in the chat asking about Elf, which I believe reported last week.
Last week, and Elf was a disaster, and the stock kept going down after two. And it's still the tale of two markets, folks. This isn't the type of bull market that's been like buy anything and make money. We know the IWM's gone nowhere for like 3 years. 2,000 stocks going nowhere for 3 years. A lot of other stocks have gone nowhere or even down. A lot of retail stocks have kind of been little disasters. I mean, Macy's, we're talking about takeover, like they were talking, the markets were talking about a takeover, $27, $28. It's continually down. It's $15. We're going to hear from them this week here too. I mean, it's been the tale of two markets, and some stocks are doing well and other stocks are not doing well at all. So I think, you're still in the stock pickers market. Technology still has outperformed. Monday.com maybe has, that going for them, but as we enter retail earnings season, it's going to be really interesting to see what happens.
Yeah, I mean, just looking at Elf Beauty's chart from like a long-term perspective, we're on a daily here where my cursor is June 1st, 2022. So, about 2 years ago, this was a $20 stock, got all the way up to $220. Anytime you really have that sort of moves, you're going to have these types of pullbacks. Like you can even go back and look at a chart like Apple or Tesla's over the years. Like any stock that has this type of growth sees pullbacks. And even going back to last year, from September 2023, Elf stock went from 140 down to 90. So it's like a $50, call it, maybe a 35% retracement there. And you're kind of seeing now a similar one up here. And I mean, I think a lot of people would look at this chart and be scared by this double top pattern up here. I'm not saying I'm going out and buying the dip right in ELF right now. It did close down 14.5% on Friday. But I just wouldn't, look at this and say like, oh my God, the story is completely over for ELF. I think that industry, I think the cosmetic space continues to grow here, and ELF is in a good position. So if this thing does keep coming down, I might take a stab at this long term, just because I do think, you do still have a good company here that should continue to grow.
There's the question to be asked here: is this growth sustainable, and is this, just a pullback in the natural process of ELF Beauty continuing to grow, or is ELF having its Lululemon moment where growth is actually starting to slow and the valuation is still nosebleed? I think it's the latter. I think ELF Beauty is having its Lululemon moment. I think the stock is topped out, and I would actually be a seller of ELF. But that's just my opinion.
No, I know. Yeah. So, but
46 times. What scares me out is, again, it's the Lululemon story. 46 times earnings. We've seen this story before. Lululemon, was trading 46 times earnings when it was up at $500. And then, we started to see the growth slow. And, I've always talked about that gap between value investors, growth investors. When the story starts to cool off and the growth starts to slow, the growth investors say, I want out. Value investors are saying 46 times earnings. Are you nuts? I'm not buying it from you. And it has to go all the way down here to where you actually get the value investors. Lululemon has actually almost accomplished that complete gap.
Yeah.
Because Lululemon has now come down to 16 times forward earnings, where you're going to start to get the value guys saying, okay, it's cheap enough. I'm willing to invest in Lulu at these prices. ELF Beauty, there's no value investors coming into ELF Beauty. So they're completely reliant on growth and Momo investors. And if the Momo starts to slow, there's a huge gap there, and you could see that stock get cut in half if the growth and the Momo guys stay away and the value guys are down at $80.
Yeah, and similar to ELF, you've seen Ulta pull back a decent amount here. It's gone from 574 in April. But I know, but that makes me think it's not like a specific issue to ELF. It's just been like an industry-wide pullback, and I still think, again, over time, that industry continues to grow. But again,
why does Ulta to stay? And this is just such a great conversation, AB. So that's why I'm going to interject here too. Why is Ulta trade at 12 times earnings and ELF Beauty trades at 46 times earnings? I mean, that is just a huge. You're paying 3 times as much for every dollar of earnings at ELF. Is ELF that much better of a company, or is it just that ELF had the awesome story going and is now cooling off? I mean, that's the question to be asked. And, in some cases, we questioned this about Chipotle for a long time. Chipotle just kept that growth rate going, though. We questioned this about Costco for a long time, but Costco has just kept that growth rate going. So maybe ELF can be the Costco of the industry, and maybe ELF will be, this 45 times earnings for a long time. But I just don't see cosmetic, and I see all this. I'm like, I don't know. I don't feel like this is a stock I want to take a chance that this is the Costco of beauty.
That's fair. And maybe if I do want to play just the industry continuing to grow, I'd rather buy the quote unquote cheaper stock, the Ulta at the lower valuation. All right.
But then when you're buying cheap stocks, they're cheap for a reason, because the growth is slowing, and and we know value stocks have not done well. This is why this market is so interesting. It's because I've been through a lot of bull markets before, and you just buy stock XYZ and it goes up. Remember Portnoy in 2020, just throwing darts at the wall and putting 3 letters together, and the stocks would just go up. And he's like, this is just how you make money. You just throw 3 darts at the wall, you get 3 letters, you put them together, you buy the stock, and you make money. I mean, those are real bull markets where everybody is just getting rich. This has not been that. This last year, 2 years, has not been that, folks. It's been some stocks, but a lot of stocks just not participating. So if you're in the wrong stocks, you have been left in the dust in the last couple of years in this bull market, which it has been a bull market. S&P, and obviously, the Q is just rampant. But it's been mostly driven by tech. And a lot of other sectors and a lot of other companies have lagged tremendously here. That's why it's such an interesting market. And as a trader, I love this type of market. One more stock people ask me about, Pablo's asked multiple times, am I still buying Micron? I did buy Micron last week in the long-term portfolio. The one thing you got to be careful with Micron is a cyclical business, so you don't want to get like, when it's starting to go that downturn, it can actually go from profitable earnings to negative earnings. I don't think we're in that downturn here yet, though. I think it's just been the natural sell-off from the highs. Micron's come back into a range where I feel like it's reasonable here now. I picked it up at 87 last week. I haven't bought anymore. I bought once. I bought a full-size position at 87, which was dang close to the bottom. I got down to 85. I'm just planning on holding that. That's in the long-term portfolio.
All right. The last thing I was going to mention was just that Eli Lilly trading higher after an upgrade from Deutsche Bank. Let's see, raised the price target to $1,000 or $1,025 here. So Eli Lilly trading up slightly this morning on that, about $16, 2% here. So Deutsche Bank still seeing some upside here for Lilly. If it goes to that price target of $1,025. That brings us to 9 a.m. Joel will be back with us tomorrow. It will be a T3 Tuesday. I'm not sure who they're sending over yet right now, but make sure to come back and tune in with us tomorrow morning, 8 a.m. You know where we'll be, pre-market prep. Thank you to everyone who tuned in this morning. Live trading starting up right after this. Any final words, Dennis?
I think you're going to see chop again. I just think this market is still, though, got some FOMO going here now. So I do think dips are going to get bought.
Oh, we got Joel tuning in. Joel said need to stay above Friday's high. And
oh, Joel's there. Nice. I love getting the Joel comments when he's not here. He's here.
Woo!
Need to stay above Friday's high. KeyBank has leaked. It was $18 when we talked about it. It's back at 17 here now. I'd still be selling rallies here in KeyBank. I think that was way overdone.
All right, guys. Again, thank you everyone who tuned in. Please smash the like. Live trading starting up after this. We'll see you guys for our T3 Tuesday tomorrow morning.